Okay, so the purpose of this presentation is to talk about the personal use of life policy. And it's a big subject, but I will try to narrate in short bullet points what the personal uses of a life insurance can be in order to manage one's needs. So it helps relieve the financial strain, financial burden on once after a person's death, upon which the burden which comes upon the family of the deceased person. And so this is the basic concept of life policy. And but besides this main purpose, there are other uses of the life insurance as well, which are the subject of today's uh, this conversation or presentation. One is so I will talk about those one by one. One is survivor protection. The person who survives the deceased, to protect their financial well-being. So, for example, if uh, A is the breadwinner of a family, say he is survived by his wife and five children under the age of 18, then what happens to the education of those children? What happens to the food, the daily expenses, monthly expenses? If they have a home, what happens to the home? If they have a vehicle, how would they maintain the vehicle? And so forth. Uh, the education expenses will be increasing gradually. Surviving mother, of course, she is getting older day by day. Her health is not will not be the same after a few years. That is like as compared to the present. So all these factors count in assessing the life uh, needs. So first thing is the benefit of life policy is that survivors, they have protection. And then another benefit of life policy is estate creation. Uh, the deceased may leave as or build estate for the family, and if the main breadwinner is deceased, he or she may leave estate for the survivors. And then, uh, besides estate creation, life policy can be used to preserve and retain that estate. Mortgage payoff is another advantage of a life policy. And for an average American, the biggest investment is mortgage, having a home, buying a home. This is the one of the biggest investments that an average American makes in their lifetime. And if the mortgage the person who bought the home dies uh, before the mortgage is paid off, what happens to the home? Uh, what about the payment of the mortgage? That is a big question, and life policy provides means to manage that obligation. Then liquidity. Retirement plans also come into the picture when we talk of liquidity. How much cash do we have to meet the emergencies? And what happens to the burial expenses? And persons uh, may leave the landed property, home. They may leave homes, rental property. They may leave stocks, bonds. They may leave cash in bank. But the problem is, all these assets, they're good. But as time passes, these assets lose value. Cash decreases. Stocks may lose value in when the stocks market goes down. Bonds, same situation. The rental property becomes expensive if the children do not have means to earn money and pay for the repair and maintenance. That rental property loses value. The rent starts decreasing. So there we need a means to sustain the inflow of cash on a regular basis. And this is where life policy provides the means to continue keeping the liquidity intact. And there may be a questions from the persons that they have uh, like gold, jewelry, they have real estate, they have farms and farming equipment, or other non-liquid assets. The problem is, as I mentioned earlier, these assets lose value. Second, if there is an emergency, these assets, if sold in emergency, won't give you enough money or proper rates, proper return. And first of all, these are non-liquid assets and cannot be sold immediately. Cash accumulation is another use for personal purposes which life policy provides. There are certain types of whole life policies that provide cash value to the customers, and the policy accumulates cash value as the time passes. And there are certain types of whole life policies which may be used to withdraw money or take loan from that cash value. And if there is a withdrawal, it does not have to be paid back to the policy, but if paid back, it will keep the death benefit same as originally planned. So in nutshell, there are about six personal uses of life policy, in which, first of all, to protect your family, second, to pay your financial obligations such as loans, particularly mortgage or student loans, if there are any. Then Financial planning. If I know that I have my kids will be going to college, they will be taking loan, then I can plan ahead so that first they don't have to take loan. Their life policy gives them enough money to continue to pay for their tuition costs. If they have to take loan, the life policy should be in place to pay back the loans when the time comes. Then estate creation and retention. Then keeping the liquidity, financial resources intact, and a continuous inflow of cash whenever there is a need. So these are a few personal uses of life policy, and I hope this presentation will be useful for those people who are either thinking of having some continuous inflow of cash to meet their exigencies, emergencies, and needs, or if they are not thinking, then this will be a kind of information for them that they should start thinking about managing their finances. Thank you for listening.